We've seen a lot of innovation in the payments gateways, in the fintech space, but less so in the capital markets. That was till 2016 when WealthDesk came along, which is a B2B2C technology investment platform which provides digital wealth management services, value-added broking services. In a span of 4 years, it now boasts of over 25 broking as well as investment advisory partners, and at the helm of it all is Ujjwal Jain, the founder as well as CEO. Ujjwal, it's a pleasure speaking with you, and thank you so much for chatting with us. I first want to just understand what makes WealthDesk unique. Why should, in any SEBI authorized broker or an investment advisor look at WealthDesk?
So WealthDesk as a vision has been very different compared to what you would see in India right now, especially around mutual funds driven like digital wealth management platforms. So we have been B2B2C by design, and we have just like as you initially talked about how payment is getting unbundled, banking getting unbundled, lending getting unbundled, we have sort of unbundled investment management industry. So what we do as a platform on the B2B2C is that right from moment you do a research as an asset management company, from there you create portfolios which we call as investment products or wealth baskets, to productizing it, making it distribution ready, and on the consumer side integrating with every major broker in the country so that these portfolios can be distributed at scale to the end customer of a broker. So we as a platform has build a deep tech platform which captures this entire value chain. So what has happened because of this, that today we now incubate some of the biggest full service brokers to get into value based broking on top of these portfolios called wealth baskets. Some of the top investment advisory firms actually are getting into advisory based portfolio creation through our platform and getting into retail customer level through broking. So beyond mutual funds and PMS, we have created a new product ecosystem in form of wealth baskets, and from an end customer point of view have created a new portfolios which they can invest in beyond mutual funds, and these portfolios can actually be more curated to their investment goals, risk return objectives, or some thematics or ideas or sectors they want to invest in. We have made it very simple, democratic at the broking level as a platform.
Okay, so just to understand for the benefit of our viewers, when it comes to direct investing in the markets with the help of brokers and sub-brokers, usually a broker would give you an advice, some recommendations for directly investing into individual stocks. But here the value add which your platform provides is that apart from aiding the transaction of these direct investments into stocks, you are also providing additional avenues of investments which you are calling as wealth baskets, which could be a thematic portfolio, which could be an ESG linked portfolio, maybe some sectoral twist and tilt to it. So basically, a customer will also have various other options when it comes to investing, and you have simplified it, which means the entire transaction is very easy and it's just one click, as you pointed out, correct?
Yes, correct. So from an end customer point of view, at the end of the day, it's all about investing in these portfolios. Now when it comes to direct stocks, the problem is that from a wealth management point of view, from an end customer point of view, India, we have never talked at the retail level what should be the right asset allocation, because see, you end up buying a lot of HDFC Bank shares. Your mutual fund might have also have HDFC Bank share. So when it comes to portfolio based investing, these entire objectives is streamlined, process driven, and you end up not looking at individual stocks. You start looking at strategies, themes which fit to your larger investment objectives. And these portfolios, because they are created for different risk return objectives, from an end customer point of view, they can be curated in a way that your entire wealth creation becomes very simple on top of broking. So that's why brokers are being our biggest evangelists in terms of driving this whole scale, where they are saying that on top of our transactional layer, the moment we get WealthDesk platform, we are talking about scaling value based broking to larger investor community, and their focus, whether through their distributors or franchisees, they are moving from transactional based broking into value based broking driven by these portfolios. So that is what we are organizing. And when it comes to investment advisors, because till now either you were doing a mutual fund distribution through platforms, for example, or you were doing PMS. Between these, through RIA, now they create these wealth baskets and can make their retail investors invest in these portfolios seamlessly through any of the broker on our platform.
Ujjwal, what is absolutely fascinating is that you saw this opportunity well before most of the people. You conceived this in 2016, and in a span of few years, you've scaled it to great heights. And in a way, you've also anticipated some of the regulatory changes which would come around. Very quickly, walk us through what the journey has been like. And I also want to touch upon the future regulatory landscape. And in that, if you could just say, why do you expect some of these more specialized wealth baskets to be, the future when it comes to investments by consumers?
Yeah, so as you pointed out, so in 2016, if I would have actually talked, so we are a bootstrap startup till now. We are just closed our pre-series A funding, and we will be closing our series A in a couple of quarters. Now, back in 2016, if I would have talked to a VC, say that I'm getting into a complete value chain of asset management in India, right from product creation to distribution. I'm trying to build a platform like this. A VC would say, why would you want to do that? There's mutual funds, there's a proliferating mutual fund industry. Why would you do that? But the fact is, the cues were coming from the regulatory changes. Now, right from SEBI 2013 RIA draft, like investment advisory draft regulation, mutual fund reclassification, where in terms of what kind of mutual funds could be created within a market cap schemes and bunch of stuff. So all these, and the fact that capping of expense ratios, focus from distributor-led investment management to more fee-based investment management, all these are cues to actually drive the next 10 years of equities market, which means that if whether you are a broker, whether you are an RIA, or whether you are an AMC, the future is more about making money from an end customer at the fee level, at the subscription level, and not at the tail end level. Now, if I compare it to global markets, let's say Charles Schwab would be doing direct indexing in the client's account through separately managed accounts or an RIA account. That market India has never seen, because it's a very technologically very, very complex play, because you need to stitch the advisor till the exchange level through a broker. Now, we spent 3 years building the platform before we went live. Now, if in 2016, if I would tell a VC that I need money just to build the technology for next 3 years, nobody would come and give me money. Absolutely. And that is where we've been bootstrapped till now. And now that we have built a platform, we see that from a regulatory standpoint, there will be a lot of innovation happening under RIA model or advisory based portfolio creation.
What is the innovation that you see?
So for example, like today on our platform, I can give you some statistics. So for example, we have a portfolio by an investment advisor called OpenQ. They are calling themselves as MSCI of India, driving the entire AMC play through our platform. What they have created portfolios, let's say their defensive momentum portfolio has outperformed benchmark like in last 1 year significantly. Similarly, for example, there are some thematic portfolios around digital India, for example, outperforms like some of the top technology driven mutual funds by 10 to 15% on a benchmark model. So the statistics are very clear that the kind of portfolios that are being created under RIA model through our platform, and some of these will become one of the more sophisticated ETFs that AMCs will launch in the future. So we see that the next 10 years AUA that India will see will have lot of traction coming from RIA based differentiated portfolios, ETF portfolios, indexing portfolios, which will actually make like very, very like focused wealth management from a retail customer level very democratic in nature, which was maybe till now accessible to only ultra HNIs and family offices when it comes to differentiated portfolios. Now this thing's getting democratized at broking level, that will drive maybe next 10 crore demat accounts in the country.
You said up until now you've grown organically, completely bootstrapped, but now you've raised some money. Yep. What is the plan for Wealth Desk? So
plan is actually, now that we have incubated some of the biggest full service brokers, including Motilal, JM Financials, Anand Rathi, when we have integrated with...
You have discount brokers as well.
Discount brokers like Zerodha and Upstocks, we are integrated with them. We are working with a bunch of other discount brokers and full service brokers. So the idea is that on the distribution side, we want to make sure every broker is part of our ecosystem. And on the product creation side, we have a waitlist model. We don't allow any advisor to be on part of our platform. So we follow a very screened, like very institutional research, like curation or validation before we onboard an advisor. So there we want to ensure that whether it comes to smart beta, whether it comes to active portfolios, technical portfolios, sectoral portfolios, thematic portfolios, we create a new bouquet of investment opportunities in India through our platform, and sort of build one of the, on the consumer side, through our broker partners and advisor partners, build some of the biggest digital AMCs and wealth management offerings from an end customer point of view.
Are you already seeing a pickup in terms of these differentiated wealth baskets and offerings and products?
Yes, we are actually seeing customer who would have ended up investing in a mutual fund or even a PMS, they are investing in Wealth Basket. The best part from an end customer point of view, the complete control of the underlying portfolio, underlying stocks or ETFs that you are trading in this Wealth Baskets lies with you in your Demat account. So there's a complete transparency. Your dividend comes in your bank account, and let's say if contingency situation comes where you need to withdraw some money, because you can instantly redeem some money from these Wealth Baskets through broker, you get money on almost real time basis. So these ability to control your portfolio and still do wealth management like a PMS provider would do, available at the retail level, is what driving our adoption. And what we are looking at is now that as more broking accounts get created in India through like first time customers, now they want to create wealth where immortality rate becomes very important from a broker point of view. These portfolios
and these millennials are also very savvy.
Correct. So they are very savvy. They are more like a DIY or do it yourself.
Correct.
So they really think that these portfolios provide me that empowerment to actually create my wealth, because nobody is nudging them or nobody is guiding them, but they're still managed. So these assisted,
and they're willing to take that risk and invest in some of these more seemingly complex products.
Correct. So for example, if you want to end up today, let's say want to invest in pharma theme, now you might
I'll go to a mutual fund and say, buy me a pharma fund.
Technically, yeah, so that's the way. But on top of broking, today you might end up buying a select bunch of pharma
large
stocks.
caps.
Now you won't be able to track every pharma stock. But let's say an advisor who have taken a more momentum tilt and a quality tilt on the pharma universe and created a very unique portfolio for you, it becomes so simple for you to create wealth. And because these are managed, so every time there's a change in the market conditions or the investment strategy, you get to just simply approve these changes in your account and you're through.
In a very short span, as we said, you've garnered a significant market share. I think what are the number of Demat accounts which indirectly?
So in terms of transacting users, we will be clocking somewhere around between 500,000 to 1 million by 21 closing. But in terms of access to customers, because we are integrated with most of the major brokers in the country, we are looking to actually have an access to 90-95% Demat accounts so that we can provide these differentiated portfolios at scale in India.
What is the growth rate Wealth Desk has been enjoying?
So organically, we have grown in a B2B2C model. So we are adding one major broker partner and an advisor partner every week right now. And we have a wait list right now. So that's why we are growing beyond our capacities, and that's why we have just closed our funding. And so which means that like our B2B2C growth has been like I would say month on month, we are like adding one or two partners, which is like more like a SaaS scale, because adding a B2B partner at this scale in India, in our space, is not simple. Let's say today I'm going to work with 2 full service brokers who are going to go live next week, and while we are already parallelizing work with some other full service brokers. So in terms of consolidation, we in a B2B2C model, we have grown really well. The larger focus in 2021 would be to actually focus on more millennial DIY customers through our online broking partners who are majorly discount brokers, so that we can serve a holistic wealth management solution to these end customers, where they are not led by any distributor or a franchisee of a broker or a full service broker, but they are coming directly on the internet ecosystem.
A lot of your growth hinges on the ability to anticipate regulatory changes. You did that, spot on, up until now. Going ahead, what are the regulatory changes that you see from a capital markets point of view?
So I'm very bullish about this recent regulatory changes that SEBI has tweaked in terms of setting up an AMC, especially as a fintech. So they have removed this profitability criteria. Net worth requirement has been doubled to 100 crores, which means we are talking about a new market opportunity in India, where some biggest AMCs of next 5-10 years will not be coming from the existing AMCs that are.
Could you elaborate a little bit more about?
So for example, I could say that on our platform, for example, you can set up an entire AMC, right? From like, let's say if you want to set up a more quant or a factor or a passive portfolio driven AMC, and you are a fintech, you don't have any large brand built over 20 years, you want to set up an AMC and you have a large acquisition strategy in terms of market access, where you can capture 10, 20, 30, 40 million customers through digital channels, you can set up an entire AMC. And because of these regulatory changes, it becomes realistic now. And because we have been a platform enabler of sorts for so many years, we are looking to have a compounding effect and build some of these big digital AMCs of the future.
Just, as we wrap the interview, you spoke a lot about, targeting indirectly, of course, these millennial customers who want to do it yourself, DIY type. What about for the traditional brokers? If you could just give us some case study of then and now. If someone signed up with you, any of your full-scale brokers, and you have quite a few, right? The JM Financials, the Prabhudas Leeladhar, Motilal Oswal, Anand Rathis of the world. How has life changed for them from 2018 when your service went live to now? What is the benefit that you have added for them?
So, previously, when it comes to broking, the typical life cycle of a broking account involves when you open a broking account, you put some money in the broking account, and you start investing in stocks. Whether, as you rightly said initially, that you get a lot of stock tips from brokers, but the problem is that these are silo decisions you make in your investment journey, and that doesn't mean that culminates into real wealth creation. You might get lucky with few stocks through your broker, but when it comes to long-term wealth creation, till now, even a broking customer might end up buying a mutual fund for long-term wealth creation, even though he has a broking account. So broker knew that market opportunity they were lacking as a ecosystem. So with our platform coming into play, what has happened that brokers are now organizing their own research, their own advisory partners, their franchisee distribution strategy around Wealth Basket, which means everything from an end customer point of view is a portfolio, whether tracking a theme or a investment strategy or a sectoral strategy, and these distributors and brokers are actually getting into value-based broking completely through our platform. So more like from individuals transactional based broking, we are talking about portfolio based broking now, and that is a huge play for next 5-7 years. Yeah.
Okay, and just one final question. How has COVID changed the game for you in terms of Wealth Desk, and going ahead, the role of technology?
So COVID actually has been like a demon moment for us. Like if we talk about payment industry, like post demon, they had a rush in terms of UPI adoption and all of that. So from a digital adoption point of view, whether you talk about end customers, you might have seen all these statistics around number of broking accounts expanding like never before. The people realizing that the secondary source of income is very important. So we are talking about an industry which is push based. Nobody looks at their wealth creation very seriously. But some of the crises that humanity goes through, you realize that why it is important to have a secondary source of income. Wealth management is so important if I lose my current jobs. So all these things, behavioral changes are happening at a very like mass level. So which means that it will culminate into focus on more financial assets. So which culminates into new broking accounts, getting more AUM into capital markets. So all that adoption is at exponential rate. It's happening at an exponential rate. And the other thing is that the overall market ecosystem, like where you talk about interest rates are at an all-time low, inflation is gonna be a big problem going forward. So the fact is FDs or the traditional investments is anyways is not going to go from mainstream investment like opportunities. People will rely more on financial assets around equities, ETFs, debt products, and all of that. So all that means an opportunity for us to actually expand Indian markets.
Advised wealth management via the platform mode, that seems to be the way forward for this decade at least. Thank you, Ujjwal, for joining in, and wish you, your team and everyone at Wealth Desk all the very best. Thank you.